Hi, this is Randy Finney with the Right Side of the Chart, and this is a late session update for Wednesday, September 13th, 2023. In this video, we'll start out a quick update on the equity markets, and then I'm going to cover, like I like to do, some of the things I'm watching, which will include, but not limited to, the financials, a couple of top components there. I'm not going to do a deep dive. I'll just update the regional banks, JP Morgan. And also want to do an update on the builders. A few weeks back, a month or so ago, maybe a little more than that, started highlighting the builders as attractive short setups. They looked very toppy, and there's some additional updates I want to do on that today. I'm talking about the home builders, of course, and ITB, XHB, the home builder ETFs. The VIX, I think the VIX could certainly looks poised for the next spike up, and the VIX rarely rises unless it's the stock market's falling. So we'll look at that, and then I'm going to go over. It sounds like a lot, but I'm going to rifle through those initial ones pretty quickly, relatively quickly, and then just go over some of the stocks that I have alerts set on. I've had 2 alerts fire off today. And I'll get to those in a second, Schwab and Netflix, and then maybe share some of the others that I'm watching. All right, let's dive into it. Let's start out with QQQ. Just a little sidebar here, a little commentary. I noticed that comments have gone dry in the last couple of days. Very few. There's a couple out there, but and I've done this long enough. I've been doing this for many years now, and noticed that this is that point where most people give up. It's also early in the fall, late summer, I guess, or official early fall now, whatever the cutoff is there. But trading volumes often do taper off, so I get that too. But there's also this frustration level, I imagine, for those, especially those that only trade the stock market. There's been a lot of opportunities in individual stocks, commodities, sectors. But if you're trading the broad markets only, we're at where we were 3 months ago. I highlighted that yesterday right here. If you look back, we went up a little, down a little. Same with the S&P 500, and there we are. So just to kind of recap it, we'll break one way or another, and you guys know which way I think it's going to go. I've made clear about that, if not 1,000 times lately. But we need to take out that red uptrend line on QQQ, and then really nail in the coffin levels down here, about 354.70. Let me just look at a couple other things here. Well, let's jump forward. Let's just look at the regionals. The regional banks continue to move lower. They received a stay of execution from the Fed back here when everything was melting down. We had the 3 big bank failures, and they let them just basically, like everything else, like they did in 2008 financial crisis, have allowed the banks to continue to mark to fantasy, is the term in the financial. It's the financial lingo for instead of marking an asset to market, and we're talking about their treasury bond holdings. And keep in mind, the big problem where this all started as well is the real estate holdings. These commercial or the regional banks. You've probably read a lot about it, the empty office spaces and around the country, and commercial properties and things like that. A lot are defaulting, big loans coming due, and a lot of these companies increasingly cannot roll over at the rate, so they're just strategically defaulting. They're defaulting on loans in the commercial banks. But again, the commercial banks also are allowed to mark to fantasy there as well. That started back in '08, and they're allowed, meaning if they have a loan that's very likely to be defaulted but technically hasn't defaulted yet, they can still value that or whatever they want. So there's just a tremendous, potentially a tremendous, ginormous amount of embedded in hidden and unrecognized losses on the balance sheet of these regionals. So keep an eye on them. They're important. Again, collectively, individually, the regionals don't matter as much, or at least they didn't up until, when we had the 3 big bank failures, and then Silicon Valley Bank and these others were suddenly deemed too big to fail where they weren't before. So, just keep that in mind, that typically any one regional doesn't pose a systemic risk, but collectively as a whole, they do, absolutely. And so that's one to watch, and we're continue to move lower. It's not a perfect fashion of that bear flag breakdown yet because we've had some consolidation here. Typically, you want to see an impulsive move down. However, we're stair stepping lower. They peaked back here, and they've been moving lower. So one to watch going forward, as are the big banks as well. And we'll just start with the king of them all, J.P. Morgan. Remains below trend. Let me see if that's a cleaner board there. You can see it. And my busy board, if you will, and there's the primary trend line, and we're still below, well below it. So that is a divergent high, sell signal number one right here in the minor trend line break. What appears to be a blow off type top right there, that near vertical run up, and we've been stair stepping lower since. Big sell signal when the trend line, primary uptrend line off the mid-October lows was taken out, and we're well below that. So this one's on a sell signal. According to my analysis, right or wrong, I've got plenty more downside to come, and I can all but promise you that this will start to become a big focus on the markets if I'm correct. It's a big if, but it's one to watch. And what do you watch for now? Well, we already tested that 143-ish level right there, so pretty much a break under those recent lows. That should get the attention of the markets, and then you have the 200-day moving averages, and then, of course, my targets. So again, one to watch. I gave you a bunch of charts the other day, earlier this week, things to watch, and this is still one of them. And it's still it's down today, not a lot, but we need to take out those recent lows right there. Alrighty, let's go into, and remember, there's a lot of others. I've covered this sector, the banks and the other big financials in detail recently. You can reference any of those videos by just clicking on JPM under this post. When after it goes out on the home page, it'll say tagged with, or tagged, and it'll be the symbol tags. And if you click JPM, because I've covered it in this video, it'll then load all other posts that I covered JPM, which would be every post that I've covered the big financials in recent weeks. ITB, okay, so back here, mentioned that was time. It was all I was hearing about in the financial media is how great the home builders are doing. It's been a huge boon to them because individual homeowners, existing home sales were way down because nobody wanted to give up their 3% mortgage. And so that played well into the hands of the home builders. Just pump out, build new homes. But looking under the hood, and I've looked quite a bit into this, it's not as rosy, and that's what I read back here, as it seems, because they were, instead of dropping prices, they were making big concessions. They were buying down mortgage rates for their customers. They were throwing in the kitchen upgrades and pool and all that other stuff, which artificially holds the price up, because that's the last thing they want to do. If they start price cutting, that tends to be a vicious cycle. It can spiral. And however, that eats into their concessions. You sell a $500,000 home, but if you're putting in $50,000 in concessions, you really just cut out $50,000 or 10% of your profits. And again, I'm just picking round numbers. So either way, doesn't matter. That's my fundamental ramblings, or at least fundamental ramblings of others, which I've read about. But technically, like I said, you had a sell signal there, short entry, second breakdown there, back test, and we're moving lower. So pretty much right here, let me give you a magic number that should do the trick to open up the door for the next leg down, give or take right here. Why did I pick that point? Because I see all these reactions right here, and we're coming up to there. So we already, again, sell signal 1, sell signal 2, objective short entry 3, if you will, on a back test. Back test isn't a sell signal, it's just an objective entry. Especially that impulsive rejection I like to see off the back test, and then that's usually what resumes the downtrend. So again, another sector to watch. I'll put an alert here, and that'll tell me, hey, revisit the home builders. I'm going to rifle through the holdings. ITB is one of 2 home builder ETFs. XHB, I think, might have a little more volume, but ITB, I think, has a little higher weighting of the actual home builders. I say that because within the home builders ETFs, you have a lot of companies that are not home builders. They have they're related to the housing market, like Home Depot and Lowe's. They're not in the business of building homes, obviously, and Sherwin-Williams, neither are they. Sherwin-Williams sells paint, but more homes being built, more paint and lumber and other things are being bought. All right, so just recap very fast. Divergent high, and we didn't have that when I started highlighting the sector in some of these, and now we have it. I didn't, and I told you at the time I couldn't make a big case to short Home Depot and some of the others. The home builders, yes, they looked right to go first. There was your uptrend line. So this one put in a divergent high, and those are the things I like to see. You know me, I like these divergent highs to get short, divergent lows to get long, and that's what we have now. So. There's Home Depot. I'll just rifle through the rest. Lows, put in a divergent high, stair stepping lower. Obviously, you want to see it remain above that high if you're short. Great time to be short. You know, you either short a breakdown, that's your objective entry, a back test of the trend line, or the wedge in this case is a bearish rising wedge, which we never got. So that was your first objective short entry, or a kickback. And if you kick back rally back to the breakdown point is usually an objective level, and we're just rolling off that. There's our breakdown point. So a lot of these have, in my opinion, their objective short entries now with stops somewhat above, and you know, much better than waiting and to short right here after the initial leg down. That's when you want to be covering, if anything, and then re-entering back here. So that's another one. Looks to be headed lower. Sherwin-Williams needs to take out 265, give or take, right there. Yeah, about 265. That already broke down after putting in a divergent high. There's your trend line break. GHI, right there, divergent high, breakdown, pulse of everything you want to see. So these are, these are nice looking shorts in my opinion. They were back then and they still are. So we, that was the next leg, first leg down, I believe. And I still, maintain additional downside targets on these. Not each and every line. Some of these are older levels. Let's just focus on the initial targets. And again, the takeaway is if I'm going through these, and I'm doing these pretty fast, if you're seeing this one, for example, you can see my first target was 112.78. We're there now. We hit it recently. Boom, hit it again. Now the way that works, is it objective to short here? No, absolutely not. You're right you just tagged support again today. You wait for a break below, and that opens the door for the next leg down to the next target there at 105, and then 89 and a quarter right there. Lennar, breakdown, impulsive. So these are perfect in my opinion. And that doesn't mean they're guaranteed to play out, but these are my kind of patterns. I mean, just big divergences, overbought conditions, clean uptrend line breaks, impulsive, everything you want to see. Down below a lot of the key moving averages coming up on the next ones. The 200 days are going to come in with this 109.40 first target. So that's it. So I could go over each and every one, but I'm not going to. I'm just going through these right now in order of market cap. So you're looking at the largest ones, the ones that are going to have the biggest impact on the sector. This is NVR, big level right there. We already hit it once, come down, break that, and then we're going down here and then here. So again, beautiful charts. They all look the same to me, or very similar, I should say, with divergent highs. And I always say divergences are not sell signals. What are sell signals? Are breaks of support or a bearish chart pattern. In this case, these trend lines. And then your next sell signals on a lot of these are about to come up. So there it is. Look at this one, BLDR. Boom. Set an alert if I don't already have one. Beautiful trend line. Why is it beautiful? 1, 2, 3, 4, multiple reactions there. We've got about a dozen reactions, clean reactions. There had a sell signal there. It was impulsive. It was on it following a divergent high. A lot of thin air down here to my next target. Yeah, there'll be a little stop along the way. They'll probably play it around this gap, but this is where we're headed. So just to give you an idea, you're looking at probably a 35%, 35% drop. So you use let's say you want to use a 3-to-1 RR, risk reward ratio. You can set, even better than that would be a 10% stop. So you could put a stop there and take a shot. It's either, but again, you don't short it right now on the trend line. You wait till a break of the trend line, which is not much farther below. So that's why I'm doing this video now. I could go on and on and on. Beautiful sector. Or guys, if your head's spinning now and you're saying, Randy, I get the point. I like it. But you don't have to go over each and every one because they all are singing the same song right now to me. And that is big bearish rising wedge. This one's yet to break down. That's Lennox, LII, AC units, things like that, HVAC. And boom, easy targets, big divergences, high probability setup, yet to trigger. but the sector's rolling over. A lot of these, you know me, like today I give you, what was it, crude oil or something. I'll sometimes establish short positions ahead of a breakdown or a long position, either way, when a breakout of the pattern looks imminent and likely to me, and that's what I see here. So, and what I was saying, okay, so if you said, all right, that's enough, just use the ETFs. It's easy peasy. Or don't take it. If you don't agree with me, that's the thing. I'm just sharing my analysis, sharing what I'm doing, what I see, and it's up to you to decide what to take. But this ETF here, ITB, mirrors what I just showed you on a lot of the home builders. You had a break of the smaller wedges following the divergent highs, sell signal 1, then a breakdown of the primary trend line here, and a back test followed by a rejection. And your next objective entry right here is under 81.44. Easy stuff, right? Or it works out or it doesn't, like any other trade, and just move on to the next one. Set your stops, have a trading plan, and move on. There's XHB. So it's held up a little bit better. It's above that trend line, like I said, because it just has a higher weighting in the retail stores like Home Depot and Lowe's and all that. Less than home builder stocks. And I'm really eyeing the builders right now as the sweet spot in that sector. Okay, enough of that. Move on. The VIX. Let's talk about the VIX. We'll look at the spot VIX first. Nothing exciting when I look at the spot VIX. You know, for a long time, I've shared these. I have a downtrend line here, had this one, and this uptrend line, which formed this triangle pattern, which we broke down from here. We backtested, and we've been moving lower, but we had divergent low at the recent lows right here, and this is our divergence. It's been extending, so we're coming off a divergent low. It's a little bit of atypical action to come back down. Maybe we do put in one more divergent low. That's going to entail the market holding up for longer. If the market rolls over soon, then you would expect the VIX to go up. So just, and it also does play in well here. We can even look at it on the weekly chart. You can see those lines right here a little better on the weekly chart. There's your uptrend line. There's the downtrend line. That line's been there since, created that back in 2022. It's a key uptrend line on the weekly, and we're below it. And so this right here, see big support. I see a lot of support right here at about 1150 as the first support that comes in. So this would play out or align with maybe one more pop up in the equity markets, possibly even that marginal new high that could get us down to any of these supports, including this first one, then turn around and go on and rally. So I can't make a screaming case to be long the VIX right now, nor would I until you got to see that QQQ breakdown. That's big. The semis, by the way, I showed you the trend line on QQQ in the beginning of the video, but you also have the semis, which just hit, as I mentioned the other day. They've been just testing. Look how many tests of this uptrend line right here. Boom, 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 boom. We're right on it. So if the semis break down and take out the red uptrend line, then that 472.50 and QQQ breaks down, that's when VIX is likely to soar. So you got to be spot on with VIX. It's a couple things. First of all, you have to be Johnny on the spot when you're short selling. I love it, but I've made it very clear. One reason I love it is because stocks tend to fall a lot faster than they rise. So you can make, in a matter of weeks or months, what you'd make in months or years on the long side. But the thing is, you cannot be the last one to leave the building. You can't be you got to be early. You got to have your timing on getting out of those shorts, because once the drop is over, they tend to shoot up very fast. You have a combination of dip buyers that think the correction's over, and at some point it is, and then you have a big rally, and you also have the shorts that cover and get out. And so that's it. Now, in that same vein, if you're going to play the VIX on the long side, you're effectively playing a drop in the stock market. So you're effectively calling for a short trade on the stock market. So it's the same thing. You've got to have your timing right. The VIX is not, and nor has it ever been, a buy and hold instrument. It's a hit and run. Same with short selling the market for trends and in swing trades, in and out. And so this is going to increase the odds. A breakdown in stocks. Here, I'll give you my cleaner board. There it is. That's easy to see. There's your trend line. Breakdown in stocks, and then a breakdown in QQQ. There's your trend lines. That will significantly increase the odds that the VIX is going to scream or rally. Let's go to a couple other things and we'll wrap up. So I told you about alerts. So today I had Netflix first. This is Netflix. Let me see if I have a cleaner board for you. No, I can make one. There's the uptrend line. That's a busy board. It's my fib board. Here we go. There's an old trend line. I'm just going to extend it right there. Boom. So this is the alert I got today. This is the trend line off the lows back there in 2022. And just had a sell signal today. It follows what you had on my main board, this divergent high right here. And so there it is. Netflix is one of the larger components. It's not the very top, but it's up there in the top dozen or so in QQQ. So to put the odds in your favor, you'll want to see QQQ breakdown. So one of two ways. The aggressive strategy, go ahead, short it now. We're under the trend line. PPO is poised to make a bearish crossover. I think it'll stick, but I wouldn't go all in. Maybe a starter position, manage your stops appropriately, maybe over that recent high. And then if and when QQQ and the semis break down, this thing should be lights out for Netflix. And I don't have all my, these are old levels marked up. Minimum target, well, we'll see. Let's just say right now, minimum, I'll be looking for a move down to about 377 there, and that's going to be a drop of about 9% if hit. The other one I had go off today was Schwab. Not yet. Sometimes these alerts, you'll dip, you'll hit the trend line. So this one needs to still take it out. I'm going to move this. Well, I can keep the line where it is. You can see the trend line here. We've had 1, 2, 3, 4. Now another reaction there. Break of that, and then this is the lights out or BOD, benefit of doubt level, about 56. And that should have repercussions within the financial markets. If you turn off all these other lines here, I'm going to just highlight, well, let me highlight these two, whether they're up here. This and this form a big old symmetrical triangle. That's bearish. That's near-term bullish, at least up to there, but there's big resistance there. And then if we can take out that, that's going to be bullish. Breaks down below, that's going to be bearish. And, it's the way I have to guess right now. That's the way I think it's going to go. All right, let me pop up my alert log, alert console. It's in another here. It's on another monitor, but I'm going to just go through these in no particular order. Let me go through those, sort them alphabetically. We'll just remember ACB. Some of these alerts already triggered. So ACB already triggered. That one went up. So T3 was effectively hit right there. First of the trend line, or that level right there. So that one's pulled back, came right up to that resistance level, about 118. Apple, this one was not a recent, this one already, where was it? Oh no, my bad. Apple broke down a while ago. I need to click manually on my, I was hitting the space bar, but that's going to cycle through the next one on another list. So next up I had Amazon. That one hasn't triggered yet. AXP, there's your trend line. I have an alert set up below that trend line. We recently put in a divergent high, big one in the financial sector. BLDR, boom. I may have just covered that in the video earlier because this is one of the home builders, or in that it's building materials. Boom! Look at that beautiful uptrend line right there in which to trigger a short. I must have just set that alert actually. Berkshire, BRKB, needs to take out this wedge, bearish rising wedge pattern. BX, Blackstone, oof, look at this, private equity I've been bearish on for a while. I think there's a big leg down coming soon. We shorted them earlier in the year, a lot of these guys, or was that last year? But big divergent high building, and minimum we're going to come to this trend line and probably break it. I'd have to zero down to a 60-minute chart. I tell you what, I don't even know where that alert's set. I'm clicking on, must be above a trend line. Oh, it's that trend line. Oh, so yeah, guys, I'm going through this kind of randomly, just looking at some of these alerts may be stale. Might have set them earlier. Cars, that one already triggered. We had a breakdown right there. Sell signal 1, sell signal 2. This is cars.com. And coming up on that 1760 target, and with 16 next. CBOE, this is the primary, or the first trend line. There's your longer term uptrend line down there. So the way this one works, it's got big divergence building, negative divergence up to this recent high. So break of this trend line should be the catalyst to bring us down to the next primary, larger, more significant trend line that goes all the way back to the COVID lows in 2020. And a lot of meat on that one. I'm going to give you one horizontal level here. I'm only on the C's in this list. I just sorted alphabetically, so I have a lot. Let me just pause the video and see if any more stand out so I don't go over each and every one, including some that I've already triggered. Well, this was the next one up. I clicked on Chipotle, and it's still an active trade. We put in a divergent high. We hit my first target here, second target, effectively hit. Always cover above the actual support level, bounced back. And there's a big old gap right here. So there's an objective short entry or add-on if you covered on T2 right here on that bounce back to that previous reaction high. And that should open the door for that third target there. EWZ Brazil put in a divergent high right here, just like it did right here. And that would have been the last one. So that one already broke down. It's just kicked back to the breakdown point, offer an objective short entry now, with the next add-on on below that recent, those two lows or three. You've got a couple spike lows right there. So objective short entry here and then there, swing it down. You know, if it goes where the US markets are going, which I believe, we're going to take out the lows. So it's kind of like to short it and throw away the key with stops in place, obviously, and just let it ride for the time being. FedEx. This is the big one. This is in my things to watch list. I shared that with you a few months back. Created a list called TTW Things to Watch, and this is one of them. FedEx, UPS, kind of gives you a gauge on. These are great canary in the coal mines, if you will, to kind of tell you what's going on in the economy. When you're seeing, and I'm going to go off on a tangent here. What I'll do is go through the alerts that I have set later on, because this reminded me to do something I meant to cover with you recently, and that's the transportation stocks, which is IYT. So again, one of there's the old Dow theory is you watch the transportations compared to the Dow Industrials. The Dow's kind of antiquated now, but the whole key is when the trannies are sucking wind, there's something going on, because if the economy is strong, and if you just really look at the core of what UPS and FedEx do, they're delivering packages and goods and products. They're moving things around the world. When the economy is strong, they're shipping a lot. They're shipping things, and you're buying large items, and you're sending packages of documents for real estate closings and things like that, and business is good. So you want to watch these guys. They are good bellwethers. And if you don't believe me, just go to a 10, 15, 20-year chart, overlay the S&P 500, and you will see that. So this is kind of a red flag. And you look at UPS, and this is a big support. It's about 155. I have it at 154.90. Look at the volume at price histogram bars. If you can see them on my monitor, they come out to here. There's a big surge. That means what it's showing you is in the last couple years, going back to 2020, almost all the trades have occurred here. This is a potential massive topping pattern, and it's very well defined. Those volume at price histogram bars are big right there, and then there's this huge thin zone right here where very few trades occurred because the stock broke out, ran up there, and that's comparable, works very similar to a gap. It's a thin zone. Once you enter a thin zone, just like a gap, most commonly you're going to see it eventually backfilled, and usually in pretty quick order, just like it was filled pretty quickly to the upside there. So this stock is at a major technical juncture. It's right there right now. I believe I have an alert on it. If not, I'm going to put an alert right there. And anything other than a whipsaw, if it breaks down, that's going to be ugly. And when you see something like that, you can view it on the weekly as well. And it just shows you this is the major, what appears to me, just a major topping pattern. It ended with that negative divergence. That was the high. And this one supports the case that I've been saying. The vast majority of stocks, the vast majority, take away the Magnificent Seven, because they had the unusual huge distortion on the indexes. But if you take them away, or you just look at the other thousands of stocks in the universe of the stock market, most are still solidly in a bear market. This is, by every metric out there in technical analysis, a stock in a downtrend, and it's an important one. I'm not picking on, you know, AIBubble.com or some stock day or maybe some other company that went the other way. This is one of the most important stocks for the economy, and it is clearly, by every metric known in technical analysis, in a downtrend. It's at a multi-year low right now, testing a multi-year low, big support. So there it is. Do with it as you want. And look, there's glass half full for everybody. If I want to draw it out here, I'm going to say positive divergence. So if it can rally, or maybe a false breakout, and maybe it runs up, and it still has a lot of overhead resistance to contend with. But if it can't, and it burns through these divergences on the weekly, and if nothing else, it's a technical setup for you. Probably not one-eyed short. I think there's better fish to fry than this, but it's more of a, hey, heads up for the market and the economy. And then, of course, there's FedEx, which I showed you. I just had an alert on. There's a secondary trend line. And when you look at the weekly chart, it tells me the same thing. This was a big divergent high, negative divergence, which is bearish, clean uptrend line break, wedge, and it's been walking its way down. Now, taking that previous high out brought the downtrend a little bit into question, but there's still a reaction high here we failed at. And, indicators look to be rolling over. It's coming off overbought conditions right here on the weekly. Last time we were overbought was right there, and this happened. The time before that was right there, and this happened. I hope you can see what I'm doing there. And the time before that was right there, and this happened. Okay, so do you want to be buying FTX coming off a weekly? Weekly overbought conditions are much more rare than daily overbought conditions. And most of the time, and this is important as I say this, especially in a bear market, if that's what this is, they are usually one and done. In a bull market, overbought tends to become more overbought or stay overbought for an extended period of time. So you're not going to do very well shorting overbought in a bull market. But in a bear market, it's a gift. So we'll see. And there's your trend line right there. Really, on the weekly basis, it needs to take this out. So by Friday, if you have a solid close below that trend line, that would be a pretty good sell signal for FTX. And again, the takeaway here is these are the going through the components of IYT, the transportation. Oh no. IYT, transportation sector ETF. Uber's in there, but Uber's nothing to do with moving goods and services or reflective. What you want to look at are the airlines, the trucking stocks, and the shippers like UPS and FedEx. Those are the ones that'll tell you what's going on in the economy. And they've all been moving lower lately. These railroads peaked. Look at it. They're falling. I wouldn't go long or short this one. I'm just showing you what's going on. Trucking, Old Dominion, breakdown. There's a sell signal. Here's an objective short trade idea for you right there. Boom, sell signal. Put a stop there and let it run. Headed a lot lower in my opinion. And again, I'm trying to give you the takeaway here. NSC looks better than most with coming off a divergent low, so I certainly wouldn't short it. I have no position, no, I don't care to go long or short, but what I want to show you, what the takeaway is, it is in a bear market. It's been in a bear market. The transportation stocks are in a bear market. The only thing pretty much not in a bear market is all things AI or tech related, and which makes no sense. But the market doesn't always make sense because they're growth stocks and a slowing. If the economy was strong, if rail and truck freight was moving along, humming along, and orders were picking up, these stocks should be going up, and they're not. They're going down, and but then again, there's been a gazillion mixed signals on the economy lately. I'm just pointing out what I'm seeing here, and then you look at the bigger picture, and this. It topped back here. So on the daily, you had that positive divergence, but longer term, this stock is headed, like many, to come and test some of these long-term bull market uptrend lines right here. That trend line goes all the way back to 2000, and all these long-term trend lines ultimately get checked. Let's just move it up right there. There's still more downside to go before it gets hit. So I could go on and on and on. Delta, the airlines have been falling pretty hard lately. That's no bueno for, it's again, this is showing you what's going on. JB Hunt, trucking stock, another shipper here, divergent high. Not all these charts are marked up. There's your divergence line. There's your trend line right there. Broke that wedge below. And so I'm seeing the same thing. Love Southwest Airlines. Remember, I started picking on the airlines, the whole leisure and hospitality and leisure sector. That's cruises, airlines, restaurants, because that, in my opinion, was peaked recently. Now it's at support. I have to imagine at least some of this drop in airlines recently, including Southwest here, had to do with the oil prices going up. And as I told you today, I'm shorting oil and threw it out there for. So that may give these guys a reprieve, and there'll be a bounce coming. This one has positive divergence. If the market's going to new highs, if my new high scenario for the market's working out, then these guys are probably going to rally hard. So, take it as for what it's worth. I want to show you what's actually happening. I always talk about what I think's going to happen, but this thing's in a downtrend. Tried to break out here. It had a nice clean bear market downtrend line. The breakout couldn't stick. It failed. That's bearish. And it's at support now. And it does have divergence, so it has the potential to rally here. But if it doesn't, that's very bearish. All right, so I could sit here and click on every single transportation stock. You're going to see the same thing. Almost all of them are in downtrends. And they're falling a lot more than the stock market has recently, which says something to me about the future direction of the economy. So I'm going to wrap it up here, get this out to you guys, and continue to hunt for trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.